Join us as we bring clarity to what is meant by hawkish and dovish. Ever wondered how central banks like the Federal Reserve influence our economies? Allow me to demystify. Central banks are the guardians of a country's financial system. They control the monetary policy, which includes managing interest rates and overseeing the money supply. This means they have a significant influence on how much money is in circulation and, in turn, how much we spend or save. A prime example of a central bank is the Federal Reserve, or the Fed, as it's commonly known. The Fed has a triple mandate. First, it aims to promote maximum employment, ensuring as many Americans as possible have jobs. Second, it strives for stable prices, preventing wild swings in inflation that could disrupt the economy. Lastly, it seeks moderate long-term interest rates, aiming for a balance that supports both spending and so, central banks, like the Fed, play a crucial role in maintaining our economic stability. But how do central banks achieve these objectives? Through policies that can be broadly classified as either hawkish or dovish. Picture a hawk high in the sky, its keen eyes scanning the landscape below. This is a good way to visualize a hawkish policy. It's an aggressive stance, often associated with higher interest rates. Why? Because just like a hawk flies high, a hawkish policy sends interest rates soaring. The aim is to curb inflation and stabilize the economy. It's a tough, no-nonsense approach, keen on keeping a tight rein on the economy's reins. Now picture a dove cooing gently as it flutters low to the ground. This is the embodiment of a dovish policy. It's an accommodative stance associated with lower interest rates. When central banks adopt a dovish stance, they're trying to stimulate economic growth. They want to make borrowing cheaper to encourage spending and investment. Just like a dove stays low, a dovish policy keeps interest rates low to stimulate the economy. In essence, the central bank's decision to go hawkish or dovish depends on the health of the economy. If inflation is high, they might decide to be hawkish, raising interest rates to control price increases. If the economy is sluggish, they might decide to be dovish, lowering interest rates to encourage spending and stimulate growth. It's a balancing act, really. Too high an interest rate might cool the economy too much, leading to slow growth or even recession. On the other hand, too low an interest rate might overheat the economy, leading to rampant inflation. The central bank's job is to find the sweet spot, the perfect balance between growth and stability. So the next time you hear about the central bank being hawkish or dovish, just think of the hawk soaring high in the sky and the dove fluttering near the ground. It's a simple way to remember the difference between these two key policy stances. Remember, hawks take flight with high interest rates, while doves keep low with lower rates. Now you might be wondering, why should I care about hawkish or dovish policies? Well, these policies have a direct bearing on the economy, influencing the decisions you make every day. Think about it this way: when a central bank adopts a hawkish stance, it raises interest rates. Higher interest rates mean borrowing money becomes more expensive. This could make you think twice before applying for a new credit card, home loan, or business loan. On the other hand, when a central bank favors a dovish policy, it lowers interest rates. Suddenly, borrowing money becomes cheaper. This might encourage you to invest in a new car, a home improvement project, or even expand your business. The ripple effects of these policies are felt by everyone, from the humble home buyer to the ambitious entrepreneur. They shape the financial landscape, guiding our spending and investment decisions. So, whether a central bank chooses to be a hawk or a dove can have a direct impact on your wallet. In conclusion, central banks, like the Fed, play a vital role in our economies. These institutions, though shrouded in a veneer of complexity, essentially control the monetary policy, steering the economic ship through the turbulent waters of global finance. Their strategies can be broadly categorized into two types: hawkish and dovish policies. A hawkish stance is akin to tightening the purse strings, raising interest rates to curb inflation, while a dovish stance is like loosening the reins, lowering interest rates to stimulate economic growth. And why should this matter to you, you ask? Well, these policies directly impact our lives. They influence everything from the interest rates on your savings account to the cost of your mortgage. They can make your dollars stretch further or squeeze them until they squeak. Next time you hear about the Fed being hawkish or dovish, you'll know exactly what it means and how it could affect you. Knowledge is power, after all.